What we're finding, though, is due to and how can we deploy that capital? Over the past 3-4 years in particular, we've gone into about 40% of our investment has been into developments. So that's where we see value. Yes, it's a higher risk. Would I prefer having a 30-year lease contract in the middle of the Champs-Élysées at 325 euro? Sure, unlikely to happen. So, and indeed, banks aren't as willing to finance. So that's where we can step in, not as an equity partner, but as a partner who understands real estate. We have the chance to improve. We have big portfolios, big funds of 10 billion, so we have a certain percentage of those funds that we can go into, either speculative, that's something new, that's indeed going up the risk curve. We've always been able to take on vacancy and leasing risks because we have big leasing teams and a good asset management team. But now we're going up into more risky versions of that, i.e. really going into your blanche variation, meaning as long as there's a building permit, we'll look at it and have a view if that risk sharing, developer builds, we lease, is a scenario that we can take. And there's that's something where we come in as a USP, where it's expertise that you need and not just cash on the table. So that will be an aspect that we may expand on in our search for good locations in Europe. And there are particular markets where we see rental growth, which needs to come around with that, of course, and where there hasn't been a big supply, and the supply indeed is minimal, which is good because we don't need the stock that we have presently. So, the worst thing that can happen is you go into an oversupply as well, along with yields then breathing out. That's the catastrophe. Yeah? But the supply is low, except for CE, leave Poland out of the game, but it's historic. So rental growth is strong. If you can drive into a development, it looks like a very good way to satisfy our investors' demands.
I think for a lot of investors, development is more of the story because simply there is no existing stock out you can buy into. So you have to carefully look at development opportunities if they come on your table. But I think at the end it comes down, do you trust the market, the location and the partner you're operating with? So do you have the team on the ground really understanding what you're doing? It's not like development means a different approach to an investment than purely buying something on a forward deal or let's say an existing stock. So I think that's something Patrizia is doing, but only in countries we have people on the ground so that we are able to monitor. We think that in some segments you simply have to buy the stock, build the stock because it's not existing. UK PRS is one of the examples we currently look at, and we also bought a development site where we want to build something because most of the existing stock in the UK PRS is not efficient in a way that it's really something an institutional investor wants sold for a long run. On that side, I think development is necessary, otherwise the market will not get going. The only thing is how to educate a developer to do something he has never done before, because he also sees no reason to do that because he can make much more money out selling unit by unit. So that is the challenging environment, I would say, for the UK market. And at the other end, I just possibly add to Philip's comments, I think simply looking at the bond yield gap is a dangerous thing, that's purely right. But I think a lot of investors are purely doing that, and they are simply buying into, and if they simply then don't understand the market fundamentals, they possibly buy into at a price of something which is a secondary asset or not well located asset at a prime price, and then realize 5-8 years later, oh, that possibly it's not a built, managed or developed a core asset, it's simply in the middle of nowhere asset that was priced wrongly, and I was the stupid foreign money that simply got into the market. I think that is the big danger right now, that everybody simply goes for real estate because of the attractive yields, missing a little bit the fundamentals, speculating that he can get out in the market in the next 3 to 4 years because everybody believes the interest rates stay low. So I think it's heavily depending on your horizon, when you look at and how you really analyze what you're buying into and what you're doing.